We have a very special guest in our studio to talk about it. Nikhil Khandelwal, MD of Systematix Group, joins us. Nikhil, very good morning to you and great to have you here at our studios.
Good morning. Thank you.
So set the context, and you know why we wanted to have this conversation is just to give our viewers a sense of what really is going on a side that is not necessarily as closely covered as what happens in day-to-day, minute-by-minute equity markets. Where is all of this buzz and appetite coming from?
Well, as we all know, I think India has been one of the busiest markets for IPOs in the recent past. Within the IPOs, India, I think, is close to about 1/3 of the global markets in terms of share. But what is changing very fast is the composition of the IPOs, and which is quite quite on the face, is that compared to last year, where we had close to about 1.6 lakh crores of fundraised through IPOs, and just about 30 to 35,000 crores was through OFS. In this year, just out of 75,000 crores of IPO raise, almost 40,000 crores is OFS. So the promoter stake sale is at an all-time high, and it just goes to show the increasing appetite for public market investors to pick up the float. I think the general the sectoral trends are something which is exciting people. The valuation gap which is coming, at value at which the IPOs are available for investors to pick up, I think that is exciting institutions as well as HNIs, as well as retail. So combination of all those factors, right? So the floats are increasing, but more than within the floats, the promoter stake sale, the OFS is just ballooning, and it's quite an interesting trend.
So before we get to what sectors might see favor going ahead based on the pipeline, etc., a question on that, Nikhil, because yes, your job as a banker is to execute what the company might want to do, but you would have given it a thought to the extent of promoter exits that are happening. Now, is this the Indian market mirroring what's been a global trend that promoter stakes naturally come off as the market size goes up and professional investors or funds, etc., come in? Or is this promoters taking advantage of high valuations and something that the retail investor should be wary of? You are doing your job. You are doing what a merchant banker is supposed to do. Yeah. But what's your thought on this?
I think it's a combination of factors. I think it's one factor, as you rightly said, is that the nature of the promoter is changing in India quite fast. Increasingly, the companies which are coming public the promoters are private equity funds. So naturally, they are 5 to 7 year life investors. They are not a perennial investor like a typical promoter would be. So in that context, they are bound to sell, right? So I think that stake sale is something which is fine. And I think the other part is more, I'll say, demand and supply. Good quality companies, promoters know that there is a demand from institutions for a piece of their company, and they are more than happy to sell a part of their stake to institutionalize their company. I think that has become a dire need. As your company grows, you want to institutionalize. But second also is to take benefit of a certain valuation which is available on the table. And
is that sorry to cut you, but is that a red flag, Nikhil? I'm just asking, or is it something that is now acceptable in Indian parlance?
No, I think it is acceptable. It is more about I think the blocks are getting picked up by reputed institutions. As long as those kind of block exits are happening, I think that is something which is fine. There is a lot of argument about money shifting from promoters to retail through the mutual funds. But I think these are informed decision makers, and I think that trend is for real. There is a significant appetite to take larger stakes in good quality companies, and I think that trend will continue. So not really a big red flag as long as institutions are picking it up.
In terms of the quality of the paper out there, since there is such a huge quantum, and could be IPOs, could be promoter stake sales, OFS, etc., etc., how would you look at the quality of what is coming out, because sometimes in this big deluge you might have some stuff which is not that great. And just because there is appetite and there is this churning machine of this much money coming into the markets in forms of SIP, etc., you have fund managers also who have to go in and put that money somewhere. Do you think a little bit of, what's the right polite word I can think of, not such great stuff is coming in that flood?
दाल में
Kala.
दाल में कंकर है.
हाँ, that's okay. That's a good way. कुछ दाल के साथ कंकड़ भी आ गए.
No, I think it's bound to happen when, you know, going is great. There are few, you know, red flags or conquer, you know, which will come as part of the pack. I think while that is bound to happen, I think one interesting feature about our capital markets, which a lot of people don't realize, you know, we only say that India is doing maybe 25-30% of global markets, IPOs. You know, quality gets weak when the volume gets high, but the important feature of our market is that probably the floats which are coming out in our market are probably the most diversified in terms of sectors. So investors get to pick and choose. In US, when you look at big IPO, which is the largest IPO market, it is driven by tech. In China, when it comes, it is mostly the government-owned businesses. In India, you get to pick into a technology company like Lenskart, or an HDB Financial Services, or, you know, and JSW Cement. Across sectors, you are getting significant.
You're mentioning the marquee ones. There are also, and especially on the SME board, I mean, there's so many.
Yeah.
At this point, just anyone can list or IPO.
No, I think markets like SME are driven more by how HNIs are investing in the market. You know, it is not so much by institutional investors. So that market, you really can't measure the quality versus quantity. Having said that, there is a fair bit of quality which has emerged from there as well. We have seen many companies from the SME space actually scaling up quite well and actually moving into the main board, are probably $500 million, $1 billion companies as well. But there, because it's small size, is HNI driven, the quality tends to get weak. But I think our focus should be on where the most of the retail money is going, which is through mutual funds, largely into main board IPOs. And I think वहाँ पे there could be a little bit of black between the you know, the green, but there isn't too much to be concerned about. There are companies which are what trend we are seeing is that IPOs more than 600, 700, 800 crores in IPO size are the only ones which are now seeing mutual fund action. Mutual funds have started to filter their investment in IPOs which are smaller than that size. We ourselves are in middle of multiple transactions. If you are bringing a 400 crore, 500 crore float, it is largely being picked up by AIFs. Mutual funds and life insurers are not big participants. Above 700-800 crores, we start to see their participation to come in. So they are filtering their choices and their picks within the deluge of floats which are coming in the market. So, you know, it's automatically happening at the end of the day. You know?
How's the deluge at your end? I would love to understand. So I have two questions, right? One is, what are the red flags that a retail investor should watch out for if there is a general rule of thumb when it comes to IPOs? Because not every retail investor invests through mutual funds. A lot of them invest direct, right? As we know, through the years. So that, but before that, since you mentioned that you are doing a lot of work, I mean, what are the more interesting ones that are coming out sectorally, thematically, if not company-wise? What are the themes, big themes for the next 3-4 months at your end or at the market's end?
No, I think the floats which are coming, which are more interesting, also reflects the kind of economic shift which we are going through. I think in India, largely, we will see a lot of interesting IPOs and floats coming from the consumption and the technology space. You know, consumption and technology has been a very important investment theme. Somewhere the you know, the government focus is also extremely high, where there are volume growth numbers. The technology businesses have done quite well in the recent past in the public markets as well, from Eternal to even Paytm these days. Industrial sector also will continue to see a significant amount of deal action. And I think lastly, financials, that will remain an evergreen space, which will continue to see some good quality companies. You know, HDB last year was a good float. I think this year we should be looking at Tata Capital being one of the good quality floats which will come up. So these three sectors in our view will be the most active ones. There will be a fair bit of action in pharma and healthcare because that sector has become extremely invested and owned by private equity funds. So a lot of those investors will be coming out with their exits through the IPOs. But I believe in terms of volume of activity, the most will be consumption, technology, and financial services.
Consumption, technology, financial services. Okay, so that's interesting. Two, what is it that people should watch out for when it comes to these IPOs and some things which could be an avoid? I mean, it could be the size of the IPO or the OFS within that or something else. I mean, how would you say? Because I'm sure you as merchant bankers reject a few proposals that come your way, right? For various reasons.
What's the cheat sheet?
Yeah, what's the cheat sheet exactly? Good one.
No, I think from a investor perspective, I think from a retail investor perspective, they probably don't read too much into the DRHP, but seeing the quality of the anchor investors, I think for them that should be one very big benchmark of the kind of companies they want to invest in. Avoid a lot of smaller IPOs. There could be, I mean, irrespective. I mean, whether we do smaller size IPOs of 400-500 crores, but in the retail investor parlance, I think it's better to be invested in larger floats with the higher quality institutional investors who come through anchor book. I think look at that as a detail rather than just go by the grey market premiums, which kind of tend to give you a very different perspective from what may be the reality. So I think those are the few things which we also actually try to tell from our retail distribution presence to our set of investors that they should largely participate in the larger floats and based on how the institutional participation in that is. Well, I think, but from a institutional investor's perspective, I think their template has become quite clear, and that's how I think merchant bankers are also kind of filtering their pick of IPOs they want to kind of work on. I think sector-wise, as I said, it needs to be a sector which is growing, which is government or a general economic trend is in that direction. So the green energy, the power, the consumption, these sectors are extremely critical. Second is business needs to be a little differentiated from what is available in the pack. Mutual funds have enough and more, AIFs have enough and more in their portfolio to pick another cement company. So they need something, they're extremely large or they need something which is different in terms of its unit economics. And third, I think the most important is valuation. So I think if you can get the valuation right with the other two factors being in place, it could be the right thing to take in the market. So this is how I think as bankers we think.
Since we have you here, any commentary on the Grow IPO, which was just announced yesterday? It's large, not the largest in fintech, but large.
No, I think it is probably after Angel, I think this will be the only opportunity for market investors to take a dip into what is the genuine fintech exposure of the retail investment market, capital market. However, it comes in the light of the issues which are happening on the derivative space, right? The SEBI paper on derivatives where they are planning to clamp down on derivative weeklies. So a large part of what the online discount brokers, including Grow, get their revenue from is derivatives. So it comes in that those times. So we'll have to see a little bit of while it is got approval, I think the recent numbers and those things will be something which investors will watch out for. It's a very exciting company, but in this time, they are going to have some explanation to do on that front.
Okay, so we know who to reach out to when we want to talk about all of these big IPOs because there's so many exciting ones coming in. Thank you so much, Nikhil. This was an absolute pleasure. Thank you for coming to our studios. It was great to have you here.